Welcome to our special webinar. Tonight we're being joined by the CEO of Super Strategist, Resi James. Resi, welcome to the program.
Thanks, Nick. Pleasure to be here.
Now Rasi, can you tell the audience just a little bit about yourself and your business?
Yeah, absolutely. I've got a passion for investing and founded Super Strategists to help everyday Australian families get ahead financially. And I guess it all started from a belief that things need to be done a little bit differently in financial planning.
Yes.
And really working with families to help them create a passive income. We identified very early on that the secret to retirement was a regular, reliable, inflation-protected income stream.
Fantastic. Rasi, we've heard a lot of reports about what's happened in the economy in 2013. Could you provide us a summary of what's really going on in 2013?
Yeah, absolutely, Nick. And I think a great way to start would be to recap on some of the forecasts we made at the end of last year. So you may recall we had a seminar, of course, in December last year, and we made some interesting calls that I think at the time people might have thought were a little bit crazy, but here we've got a chance to touch on those. We thought the property market would be up in southeast Queensland by about 5 to 7%, and particularly at the entry-level home buyers market, so really your first home buyer market in a number of suburbs around southeast Queensland, that's probably been spot on. Yeah. The broader market, as we'll see in some of the latest slides, probably up about 3%. So we're pretty comfortable that that call was accurate. We thought that interest rates would be lower by about 0.5% throughout the year, and again, we were pretty spot on there. We think that rates have pretty much bottomed out. If anything, though, we might see a bit more competition amongst the banks lowering rates. We're not expecting the cash rate to be lowered too much more. We thought that Australian shares would overall have a positive year, but there would be some volatility, and I think everyone would agree that whilst at the end of the year it will have been a positive return for stockholders, it hasn't been without its concerns. The roller coaster ride of debt ceilings and the like. So once again, we're very comfortable with that call. One of the things we got wrong in the year was gold, and that's something for 2014 to watch. We really think gold's going to be the story of 2014. Again, it will have volatility, it will move up and down, but I think next year will be a good year for owners of physical gold. And the other one that we called was for bond holders, particularly long-dated bonds, to have a bit of a rough year. And as we can see on the slide there, two of the biggest bond funds in Australia have returned around that 2% mark. So not a great year to be holding bonds in 2013, probably again in 2014.
And certainly not a good year, and some interesting predictions that we made at the end of 2013, but it was interesting to see how they went this year. Yeah. Right, I'm hearing some interesting reports about the Brisbane property market. I'm reading some of the newspapers. I'm hearing that auction clearance rates are up, and in some cases properties are selling within days. Tell me, is that the case?
Absolutely not. As we can see with the slide there, we've taken a snapshot of some of the media reports that we're reading, that the market's going crazy, that there's buyers everywhere lining up out the front of open homes, and that's certainly not the case in Brisbane yet.
Yes.
If you were talking about Sydney, quite possibly. Yeah.
So, look, Sydney and Melbourne, they're performing well. What's going on in Sydney?
Look, Sydney, particularly the last half of 2013, had an explosion in property. The figures to the end of October and November suggested the market was up 12% for 2013, and the latest figures are showing by the end of the year it could be 14 or 15%. So if you look at the amount you've invested, that's quite an amount to make in a 12-month period.
And those Sydney and Melbourne markets, they've obviously done very, very well. What impact is that having on Brisbane?
Yeah, I think that's a really important thing to look at the moment, because Melbourne and Sydney have had such a positive year, but the rental market hasn't quite picked up in line with house prices.
Yes.
So what has happened is the yield or the rental return in relation to the purchase price hasn't lifted.
Yes.
So we're finding a lot of buyers from New South Wales and Victoria coming up into the Queensland market in search of higher yield properties.
Okay, so they're targeting the Brisbane market. Any statistics or any data on what amount of sales or what's going on there?
Yeah, great question. And there's some reports prepared by groups like Urbis,
Yes.
independent research reports, that are showing that some developers are experiencing as much as 50% of their sales.
50%?
50%, so over 1 in 2 sales being to an investor from Sydney or Melbourne.
So that really sounds like a lot of the Brisbane properties, particularly those CBD areas, are not actually being bought by people from Brisbane.
Well, this is the thing. The media is telling us that the market's cooking, that everything's going really well, and that Brisbane buyers are snapping up property. The stats are telling us something else, though.
Yeah.
That it's actually not so much the Brisbane buyers as the buyers from down south.
Well, that is very interesting. Very interesting. All right, now let's look forward. So we've talked a little bit about what's happened in 2013. Moving forward, it sounds as if, potentially, you can buy anywhere in Brisbane. If you listen to what the media is saying, buy anywhere in Brisbane and you can make yourself some good money. Is that the case?
Look, what we've seen is real demand from those New South Wales and Victorian investors at the 350 to 450k price range.
Okay.
So if you're out there buying an $800,000 investment property, the research is telling us that you're probably not buying something that will be in demand from those investors. They're seeking those properties in the 350 to 450k range, and they're seeking properties with a very high yield.
Yes.
So they're not out there spending $1 million, and we're not really making a comment today on that $1 million plus market. Our market that we particularly focus on is the first home buyer market. Looking forward, there's a couple of other things that we're really focused on at the moment. The first being, where will interest rates go?
Yes.
And we've got a slide here in a second that will talk about the RBA's balancing act that they're going to have to perform. We're really seeing still the signs of the hangover from the GFC.
Yes.
In that many developers, in fact most developers, just couldn't borrow money. So what this meant, as per the slide on monthly building approvals in Australia, in 2009, because of the lack of finance available, they just weren't building enough new homes. So one of the big concerns we've got, particularly with regards to affordability, is that because of this lack of supply coming through, there could be upward pressure on prices.
Thanks. So, 2014, what are you seeing as both opportunities and risks for investors in 2014?
Yeah, great question again. And for 2014, look, the balancing act that the RBA has to pull off is keeping the exchange rate low so that our export market remains strong, and also not keeping rates too low for too long and fuel a property bubble. That's one of our big concerns. With regards to other risks and opportunities, look, there's always the risk of a slowdown in China. We can't avoid that. We are riding the Chinese wave. But with regards to our investments, the opportunities we're recommending clients have a look at, always around real assets, so,
Yes.
And particularly assets that have an income stream that is linked with inflation, so that good inflation protected income stream. And look, we still remain cautious with regards to Australian shares and definitely bonds.
Yes.
We're still very concerned about bonds at the moment, so we are definitely underweight in those assets.
Fantastic. Ray, it's fantastic talking to you. Would you mind joining us for another webinar in the near future?
Absolutely.
Look, I've got to say, it'd be great to hear a bit more about what you think is going to happen in 2014. But importantly, thanks for joining us tonight. We look forward to seeing you shortly, and have a fantastic Christmas. Enjoy your break.